We have Bill Baruch. He's the president of Blue Line Futures. Bill, welcome and thanks for giving us part of your Friday morning. Last time on, you said if OPEC only extends cuts for 1 month, we could see a buy rumor sell fat kind of response. That was, I think, back on the 5th or 6th as crude was headed up into, well, that recent high around 40. They sold the news down to, well, just below 35. It was short-lived for the most part, but I guess I'm wondering what that's telling you. You basically nailed it for the most part, but with the recent rally, what are we seeing? Is this more tied to some of the optimism in terms of stocks, in terms of the overall broader market, and again, some of the economic data that we've been seeing?
Certainly, there's some broad optimism out there right now. OPEC out there again today, reassuring of compliance, markets responding of that. And now with the August contract being front month, the 42.30 is where the gap is. And this market seems to want to cover that gap. I saw a similar positioning style across risk assets this week, and we wrote about it in our notes to clients. You know, the sell-off last week roared higher this week. You know, a little bit of bull flag pattern set up in the S&P. Similar sort of positioning, not as pretty as a bull flag in crude oil, but ultimately it's about more of the positioning style that's behind the pattern itself helps flow the market higher. And that's what we're seeing here in crude oil. So that's something I think path least resistance keeps it higher. But you're also seeing some backwardation in the Brent contract for the first 4 or 5 months out. So that's something that could also bring, you want to be fading at higher levels here as this runs up.
Bill, what is that backwardation telling you right now in terms of demand?
Well, you could start to see the supply come online here now, and it's encouraging producers to keep it up, keep the production up right now as prices go higher. Demand could be slowing out. So what positioning style you're going to see from it is potentially selling the front month and people going out and buying the back months. Okay. So it could weigh on the front months right now.
All right. Last time we talked, I think you said if we fail up around that 38, 39 area, we could target 29. I guess I'm wondering, do you still see, if we get weakness, that $29 level as the target? Because we've definitely run into some resistance here, and while we are remaining bid, still have really yet to take out those highs with any real directional conviction. That gap that we saw back in March, I think it was, or earlier this spring on the way down, you could see crude's had a nice pullback off the recent lows, but again, that upside momentum seems to be slowing a little bit right now. Where do you see downside potential if we roll over?
Yeah, I don't think at this point you can really plan on seeing 29, although the charts could say it. There's a line in the sand we've been talking about this week, right about $36. Above there, the bulls are in the driver's seat, and that's what we've seen. If we start to see a close below 36, I think about 31 is in the cards, and we've got some strong support down there now. So, I think that the ceiling is closer to the price action than you'd want to see. $42, 42. I mean, right now we're trading up above $40. So I think the risk is to the downside, and if you start seeing some lower closes, it could feed on itself. But I would imagine that 42.33 could, at this point, looks to be the target right now.
All right, let's talk a little bit about gold, because last time on, you were keeping an eye on some of the contract month spreads, as far as I remember. You said typically around $5 or $6, but they had blown way out, like to 23 back in late March. What's been going on there recently, and are you seeing continued delivery issues?
Gold seems to have some alligator blood. I mean, it is continuing to just push higher, hold ground. Push higher this morning, I referred to, but hold ground against strong major 3-star support is what we referred to it as at 17.25. It's battled at that level all week, and a good finish to the week is going to be constructive. Still, it can't follow through to the upside. We got to see that really happen. I would have expected, coming out of that June contract expiration, going into August being the front month, it helped relieve some of the positioning weight on the market. And now you haven't really seen that breakout. That's disappointing. Some geopolitical upticks around the world should support gold. Commodity prices in general are higher right now this morning, and that alone, I think, is supporting gold. So I really want to see gold, though, get out above that resistance. 1750 area needs to close out above there.
All right, let's talk a little bit about copper, because one of the things I've been keeping an eye on, very similarly to crude, is it's directly tied to that optimistic component that we've been seeing that's been helping lift the indices off lows. Copper, a similar situation. We're looking at some of the metals right now. You mentioned commodities in general seeing bit activity right now as we get set for the open. Talk to us, Bill. What are you seeing in terms of copper? We've had a nice run up off the 197 level up to 270. One could argue that's slowed as well right now, holding convincingly above the 50-day moving average, though how closely do you watch this metal as that kind of bellwether, that economic indicator?
Well, I think it's extremely important to keep an eye on and keep a pulse on. If you remember in February, it led to the downside before the stock market really had rolled over. It showed that what was taking place in Asia brought really global demand fears around, and copper was that bellwether of showing that the downside. Now the recovery has been steadfastly moving up, and copper is leading to the upside. Above 250, 255, that was a pocket of resistance. It took a bit of time to chew through, but now that we're above there, it seems to have a path to least resistance higher. So, you know, I think that's how we're looking at a lot of these markets, a lot of these risk-on assets. They're just sort of melting higher. It's surprising to see that just how steadfastly they haven't really pulled back much at all. But copper will have a path to least resistance higher above 250, 255. Same way that crude oil has the path to least resistance above about $36 now. And the same way that the S&P has a path to least resistance holding big support this week, about 30.60. So you know, for now, I guess these risk assets are going to be pointing higher.
All right, past least resistance continue to be the upside, and that's where we know price tends to go. Copper crude higher. We'll continue to watch these. As you were talking, Bill, I pulled up a chart of the ES and the copper, and almost identical in terms of the move off of those spring lows that we saw. There we can see off the 2174, and copper, again, coming off 197. Great breakdown. Really appreciate you joining us, Bill. Thanks again. Have a great weekend. Traders Bill Baruch, the president of Blue Line Futures.